U.S.-South Korea finalized details of $350 billion trade deal. Gulf countries' non-oil GDP grows 4.4% in 2024. And Nvidia surpasses historic $5 trillion valuation. Welcome to our economic bulletin with me, Halal Hamalawi, and we start off with Europe as the German and European Engineering Industry Federation has reported that more than half of German and European machinery exports to the United States could be hit by new tariffs if Washington expands its list in December, urging the European Union to renegotiate the tariff deal. It noted that 56% of exports could be affected by steel and aluminum tariffs, up from around 40% after an initial expansion in August. The German cabinet has agreed that the hourly minimum wage for workers will rise in two stages to 14.60 euros by 2027 from 12.82 euros. The change will be initially including a rise to 13.90 euros at the beginning of 2026. This is in line with proposals put forward in June by a government-appointed commission comprising employers and trade union representatives. On another note, the Federal Statistics Office estimated that workers are up to 6.6 million jobs could benefit from the increase. The Bank of England data has revealed that British lenders approved more mortgages in September than in any month so far in 2025, as mortgage approvals for home purchases totaled 65,944, the highest figure since December 2024. The BOE's data also showed consumers were not cutting back on their borrowing sharply in the run-up to the tax and spending plan. Net consumer borrowing rose by £1.491 billion in September, while the increase was down slightly from August's £1.749 billion rise. It took the annual rate of consumer credit growth to 7.3% from 7.2% in August. This is the fastest pace of growth since October 2024. Still in Europe, UK Prime Minister Keir Starmer has declined to reaffirm his pledge not to raise taxes on working people. He cited worse than expected economic forecasts ahead of the November 26th budget. Starmer stated that the full plan would be revealed then, adding that the expected downgrade in Britain's productivity outlook reflects the Conservatives' 14 years in power.
Mr. Speaker, the UK stock market is at an all-time high. The budget is on the 26th of November and we will lay out our plans. But I can tell the House now.
The National Statistics Institute has reported that Spain's economy expanded at a slightly milder pace of 0.6% in the third quarter from the previous three-month period, when it grew 0.8%. The third quarter growth rate, in line with analyst expectations, was driven by domestic demand, with consumption and investment pulling ahead against a backdrop of geopolitical and trade uncertainty. On an annual basis, Spain's third quarter economic output expanded 2.8%. The INE also revised the annual growth rate for the second quarter to 3.0% from a previous 3.1%. The The Australian Bureau of Statistics has revealed that consumer prices jumped by the most in 12.5 years in the September quarter as electricity and travel costs climbed, while a shockingly large increase in the core inflation reading seemed to rule out any imminent rate cuts. Data showed that the Consumer Price Index, or the CPI, rose 1.3% in the third quarter. The annual CPI inflation rate jumped to 3.2% from 2.1%. Crucially, the key trimmed mean measure of core inflation accelerated by 1.0% in the quarter, well above the forecast of a 0.8% gain, and unwelcome news for the Reserve Bank of Australia. U.S. President Donald Trump and South Korean President Lee Jae-myung finalized the details of a long-debated trade deal during their summit following months of stalled negotiations. The agreement, first announced in July, allows South Korea to avoid major U.S. tariffs by investing $350 billion, the United States $200 billion in cash, and $150 billion in shipbuilding. The deal must be ratified by South Korea's National Assembly. An umbrella company will manage the investments with profit shared 50-50 until initial costs are recovered. And funding will be released in stages based on project milestones.
I just wanted to thank you. You rolled out a red carpet that was a very good red carpet, a beautiful red carpet, and giving me the honor of that magnificent piece of art, because it really was a piece of art that you presented to me today. And to be the first president of the United States that got that was really something very special.
The Conference Board has reported that U.S. consumer confidence dropped to a 6-month low of 94.6 in October, providing further justification for the Federal Reserve's expected interest rate cut on Wednesday. The decline reveals a K-shaped economy where lower-income households are struggling with inflation and job concerns, contrasting with stable optimism among the wealthy. This cautious report is particularly significant as it arrives amid a prolonged government shutdown that has blocked the release of official economic data. Back home, Prime Minister Mustafa Madbouli has inaugurated the 25th International Congress of Supreme Audit Institutions in Sharm el-Sheikh, held under the auspices of His Excellency President Abdel Fattah el-Sisi. The event brings together representatives from over 190 audit institutions worldwide. During the Congress, Egypt's Accountability State Authority officially took over the Intosai chairmanship for the next 3 years. The meeting also highlights Egypt's vision for using artificial intelligence in public auditing to boost transparency and accountability. New data from the GCC Statistical Center shows that non-oil gross domestic product GDP across Gulf countries grew 4.4% in 2024, driving an overall 1.9% rise in real GDP. The value of non-oil activities climbed to $1.29 trillion, led by strong gains in transport, agriculture, tourism, and construction. Meanwhile, the oil sector contracted by 3.8% amid OPEC Plus production cuts. The report highlights progress in economic diversification and forecasts non-oil growth of 3.5% in 2025, rising further through 2027. Reuters has reported that Saudi Arabia plans to shift its $925 billion sovereign wealth fund from real estate mega projects towards sectors promising quicker returns. The new strategy focuses on making the kingdom a global logistics hub, developing rare earth minerals and mining, expanding religious tourism, and investing in AI and energy-powered data centers. Nvidia has become the first company to cross the $5 trillion market value mark after a stunning rally that has made the chip designer the crown jewel of the artificial intelligence boom. The company's CEO unveiled $500 billion in AI chip bookings and disclosed plans to build 7 supercomputers for the U.S. government. His announcements were made at Nvidia's developer conference in Washington that reinforced investor confidence in the company's role at the center of the global AI boom. Nvidia's rise towards a $5 trillion valuation comes as Apple and Microsoft each crossed $4 trillion, joining the ranks of tech giants reshaping global markets. China has urged the United States to safeguard stability of global production and supply chains of chips after Nvidia founder Jensen Huang said that re-entering the Chinese market would be a major win for the firm. And also just days before Chinese President Xi Jinping is set to meet U.S. President Donald Trump in South Korea's Busan on October 30 for crunch talks on disputes over technology and market access as the company navigates the fierce U.S.-China tech rivalry. For further analysis, we're joined from Riyadh by AI expert Techloom Elena Timofeeva. Thank you so much for joining us here on Qnews. Let me start by asking you now, what does Nvidia's near $5 trillion valuation tell us about the scale and momentum of the global AI boom?
First of all, thank you so much for having me with you today. So this valuation is, of course, an all-time record, and it's a clear signal that investors' preference has shifted from perhaps consumer devices to AI infrastructure. And something which we will be discussing is the market leadership, which has also reordered, because as you mentioned, Apple and Microsoft, their valuation is lower. It's at $4 trillion, and Nvidia is, of course, at $5 trillion valuation.
Mrs. Elena, are Nvidia's growth and valuation sustainable, or are we seeing signs of an AI-driven market bubble?
So there have been a lot of discussions recently whether AI market on the overall is overvalued. So of course there is a hypothesis that if AI spend slows down, or if we found more cheap alternatives, then the valuation is not sustainable. It becomes sustainable based on the demand, because Nvidia has, mentioned that they're going to invest quite a lot into chips. They have a lot of chip bookings. They have the new US supercomputers, right? But to keep justifying this valuation, we need to assume that there is no slowdown in the budgets, in the execution, or in the pricing.
So how significant are Jensen Huang's announcements, $500 billion in AI chip bookings and new US supercomputers for Nvidia's future dominance?
So I think that there are very important things. As you mentioned, one is the supercomputers. So he mentioned that there are going to be 7 supercomputers in the US. So that is really big. And this requires a lot of power, and this requires a lot of chips. And then obviously the bookings, this would mean that the business is more sustainable. And this is something which is driving the market evaluation. I think that these are really big numbers. And what we need to see is that longer term, you know, throughout the next year and beyond, we see the continued sustainable increase of these numbers. Because, as I mentioned, if it doesn't continue, then the valuation may slow down.
So can the competitors like AMD or Intel realistically change Nvidia's lead in AI hardware and computing?
So you would have seen, if you follow these companies, that they have announced certain products. So for example, Intel has announced the next generation data center AI chip in 2026. The challenge they have is at the moment they are behind Nvidia, right? So to catch up will take a bit of time. Now, there could be some of the risks around, you know, customer trust or regulation or US or China relationship that could mean that, you know, they would make the position of Nvidia less sustainable, and then perhaps it would give some speed to AMD and Intel. But at the moment, they are catching up. So it will take some time, and it's unlikely that they will be able to be exactly the same as Nvidia in terms of influence.
What risks could threaten Nvidia's trajectory from export controls and supply chain limits to potential regulatory scrutiny?
Of course, there are really many risks, but I think if I talk about the top ones, so at the moment we see an over-reliance on the hyperscaler growth, because you see the whole ecosystem in terms of Amazon and Microsoft and Google who rely on Nvidia chips, and they are growing.
Yes. So we're talking that Nvidia's rise is reshaping the balance of power among global tech giants like Apple and Microsoft?
This is one of the things, yes, because obviously whilst Apple remains incredibly profitable, right, some investors see it lagging behind in terms of the software and the hardware. Microsoft remains strong, and it hit the $4 trillion valuation, as you mentioned. But essentially, if you look at Nvidia, it is a critical provider for most of the hyperscalers, right? Because essentially it's providing the infrastructure on which they rely to produce their products, right? So they're customers of Nvidia Compute and some of the interconnects.
Okay. How significant is China's call for the US to safeguard the stability of global production and supply chains in the context, of course, of ongoing chip export restrictions?
Well, so I think this geopolitical situation, right, it's one of the other risks which I wanted to mention, because there is this export restriction on advanced AI chips, right? And it kind of may have even forced Nvidia to exclude China from its forecasts for the valuation. But, you know, China is a major growth market. I personally feel that, you know, China will not necessarily want a US company to fully dominate. So some of the competitors in that market may want to compete, right? And the question will be on the dominance.
Okay. What are the main risks to global semiconductor supply chains if tensions between the US and China continue to escalate?
So, I mean, obviously, as you mentioned, there is a big reliance on supply chain. So the chips may become more expensive, right? And then it's going to be more harder to produce them. So there can be certain bottlenecks, and they can impact the global markets and the earnings cycles, right? We could find a same challenge that we've seen early in the year with DeepSeek. I know it's a slightly different example in terms of the nature of it, but we could find options where China may start producing chips, you know, in a simpler, faster, cheaper way, which will contradict the position of Nvidia in the market.
Could you explain how the current export controls on advanced chips are affecting both US companies like Nvidia and also Chinese tech firms?
Well, I think one of the things, it's obviously the price, right? And it's obviously the amount of chips that you can produce and the speed at which you can do it. I think the challenge ultimately is, as I mentioned, Nvidia is the provider for a lot of the hyperscalers and beyond. right? So if they don't get the chips fast enough or in an adequate price, then it means that they can't, continue to serve at the same speed and at the same price. So this can create a bottleneck. And this can be the other way around. So I think in the current model, it is working, assuming that the relationships between US and China will continue in the same way. And I believe in the valuation for, the 5 trillion. They have considered this as a big risk. But obviously, the situation is not fully stable, so it can shift.
Yes, Mrs. Elina, I also want to know from you, how interdependent are the US and China semiconductor production and innovation despite political tensions?
Well, I think in most of the cases, there is obviously, it's a similar nature of the technology. And in principle, you are competing for a similar market, right? And there are different things both from the technology and also both from the knowledge. So I think that the competition will continue. And this is one of the biggest challenges longer term.
From Riyadh, that was Mrs. Elina Timofeeva. She is an AI expert. Thank you so much for your insights. Back again to our news, and still in the tech sector, Europe's biggest telecommunications companies have urged the head of the European Commission on Tuesday to loosen EU merger rules, a move that they said would boost much-needed investments in digital infrastructure and also help them compete with US and Asian peers. A call by the chief executives of Deutsche Telekom, Orange, Telefonica, TIM, Vodafone, Nokia and Ericsson comes as the Commission is set to announce a legislative proposal to revamp the sector. For its part, a senior European Commission antitrust official noted that EU merger rules do not prevent telecoms operators from scaling up through acquisitions, rejecting criticism from the European industry about the tough approach by regulators. OpenAI's chief financial officer, Sarah Friar, has stated that the deal with Microsoft allows the company to continue raising capital in a much less complex manner. She also said that OpenAI's intention to collaborate with governments globally to deploy its technology could enhance the United States' soft power.
To build out the data requirements and to, of course, hire the amazing researchers that have driven so much of what we're doing. And I think the third thing is that it allows us now real full ability to build our ecosystem, broadly speaking. Microsoft was an amazing first partner.
British International Investment, BII, the UK's development finance institution, has stated that it would invest $75 million to aid the India expansion plans of Blue Leaf Energy, a Macquarie asset management owned renewable energy platform. Funding is actually intended to accelerate clean energy deployment in markets across Asia. The investment will be made in Blue Leaf's utility-scale solar, wind and energy storage projects in India and is expected to generate more than 3.2 gigawatt hours of clean energy annually. Oil prices steadied on Wednesday as investors weighed optimism over a meeting between the leaders of top consumers, the U.S. and China, against an expected increase in production quotas from the next OPEC Plus meeting. Brent crude futures were up 0.2% to to $64.51 a barrel, while U.S. West Texas Intermediate crude futures gained 0.1% to $60.21. Gold price rose nearly 2% on Wednesday, rebounding from a three-week low hit in the previous session as some traders covered short positions ahead of a pivotal Federal Reserve rate decision later in the day. Spot gold was up 1.4% at $4,007.47 per ounce after dropping to its lowest since October the 6th on Tuesday. U.S. gold futures for December delivery gained 1% to $4,023.3 per ounce. Global stock markets showed a mixed performance, with U.S. indices positioning, or rather indexes, posting modest gains, European markets uneven, and Asian equity largely higher, led by a strong rally in Japan's Nikkei. In the U.S., the S&P 500 rose 0.28%, the Dow Jones gained 0.53%, and Nasdaq futures increased 0.64%. In Europe, the UK's FTSE 100 jumped 0.67%, while Germany's DAX fell 0.55%, and France's 40 declined 0.13%. In Asia, the Shanghai Composite rose 0.70%, Japan's Nikkei climbed 2.17%. Back to the MENA region, where Egypt's Minister of Investment and Foreign Trade, Hassan Al-Khatib, has affirmed that the African Continental Free Trade Area Agreement, or FTA, remains a key driver of economic integration and intra-African investment, following a series of landmark decisions adopted under Egypt's presidency of the agreement. During the 17th meeting of the African Trade Ministers' Council, held in Cairo in September, and a supplementary virtual session in October, member states reached a consensus on long-pending rules of origin for the clothing, textiles, and automotive sectors, marking the end of more than 4 years of negotiations. The agreement includes a transitional implementation roadmap. Al-Khatib emphasized that these achievements reflect Africa's collective commitment to deepening trade integration and advancing the continent's economic development, with Egypt playing a central role in guiding progress under the agreement. And that brings us to the end of our economic bulletin, and here is what we have been covering. U.S.-South Korea finalized details of $350 billion trade deal. Gulf countries' non-oil GDP grows 4.4% in 2024. And Nvidia surpasses historic $5 trillion valuation. And this concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EG to always stay informed. My name is Halal Hamalawi. I thank you so much for being with us.